Hi there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I am looking at a 5-minute chart of the micro gold contract, and I've detected a couple of intraday levels that will set me up for some intraday trading. And so we're looking at right now. Here's where we are sitting at around 3,400, and above and below. These are two regions that are actually have set me up for over here for a short trade when price pulls back here in order to then basically sell the futures. Down here is what is referred to as a demand zone, and that has set me up for a long trade if we get if in fact we get a pullback here. And so here's what's going on here. If we think about the contracts that are offered up by sellers, we can think of that as the supply of contracts. If we think about the contracts that are acquired by buyers, we could think of that as the demand for contracts. And so within this relatively narrow price region, supply and demand were in balance. Okay, price basically pretty much is going sideways here, and then of course, as you can see, there is this string of very bullish, longer green candles here. And so what happened was an exhaustion of sellers. No one was willing to sell here anymore, and so as a result, what was left in its wake is simply now only demand, where before there was supply and demand here. Once price rockets out of here, there is no longer any supply, there is only demand. And so when price returns to this region, in fact, because of the way it left and a couple of other factors here, there is the expectation that we're going to see another bounce out of here. And so that is the foundation of a trade. So I would get in here at the front of this zone at 33.91, and then I would base the back of my zone is sitting here at around 33.87. So we give this a little extra wiggle room, and then the stop out point is at 33.86. Okay, so this is a little over a $5 region, and so in the for the micro futures at $1 a tick, this is about $52 worth of risk here. Similarly, up here, this is a qualified supply zone. Okay, this is the inverse of what I just talked to you about, and represents an exhaustion of buyers. No one was willing to buy here anymore. Okay, and you can see price was in here, consolidated, and then just shot out of here. Okay, so I'm going to short from here. So basically what I'm waiting for is for price to either reach here in order to short or reach down here in order to go long. And one of the things that we do in terms of qualifying these levels, we look at the structure of the candles, we look to see how much they're consolidating. We then look at the quality of the exit, how far it goes, how much energy it has, and then we also look to see if there is similar trading at the zone, okay, in the past. Okay, and so if I go back, you can certainly see there is no trading at this zone, okay, because basically right here there was some trading, but price dropped from here. Right here, this price is going up from here. So there was no similar trading that immediately precedes this. Okay, and I found the same thing, something fairly similar here. The only trading that was up here was in the overnight session, as opposed to the regular session where we're in now. So I'm not all that concerned about this. So at any rate, I'm going to short from here, I'm going to go long from here, I'm going to pause the recording, and then when it gets to one of these levels, I will be back. And of course, from your perspective, that will happen instantaneously. So hopefully I will see you soon. Alrighty, so we are now actually approaching the supply zone that I described. As we can see here, the chart had flatlined for pretty much almost, I guess, about 90 minutes or so. But we're now approaching this. So in fact, this is where we'll enter. Okay, this is where our stop out is. You can see there's a $300 risk profile based on 6 contracts at $50 a contract, and this is where the target is down here. So we'll see what happens. So tune into part 2 of this video, and we'll see what happens. All right. After about close to 2 hours, or at least 90 minutes, or an hour and 45 minutes, something like that, basically this chart pretty much flatlined here. And in the last 15 minutes or so, there was a pop up here. It's now kind of consolidating again right underneath this supply zone here. But I am anticipating, hopefully, this will push up another couple of bucks, and then we will get a trade trigger, and we'll be in the trade. So what I'm going to do is I'm going to pause the recording here, and hopefully we'll be back very soon, and we will see what transpires. But right here, here's my order for sell 6 contracts at 34.06. My stop out is at 34.11, and my target, at least for the moment, is sitting down here at around 33.94. We'll see what happens once we're in the trade, though. So see you soon. All right, we are now in the trade. Took about probably over an hour and a half to actually get this thing up to the level, but here we are. So you can see we just got entry here. It's digging a bit into the level here, but at some point we're obviously relying on the power of supply and demand to basically take this and push it back down. So I'm going to pause the recording here, and I will be back once some progress has been made. All right, so we've been in this trade here. You can see right there, there was our entry here. So we're on the third or fourth candle here. So I've been in this now for, I guess, somewhere between 15 and 20 minutes. So far, it's a struggle. The supply zone has certainly done half of its job. It has stopped the rise in price, but it hasn't really sent it down all that much yet. We're down, but we can see it's gone down a few pennies. It's gone down a bit. So I'm gonna pause the recording again. We can see it. We have a couple of red candles forming here, but we'll see what happens, and I will see you momentarily. Hi there, I am back. And so we can see price has now started to drop here. We've been in this trade for a few minutes here. And so I'm kind of planning out and thinking about how this trade is, what my tactics are for the end point on this. This was my default setup here, which was going to and we can see that was set up basically for $300 of risk, $750 of profit, basically 2.5 to 1. And that's certainly the general framework in which how my trades are generally set up. However, given what has preceded this trade here, that's really not realistic. We've got this wall of candles that kind of set up here, and notice price exploded out of it right there, and so it's really not realistic to think that this is on an intraday basis, price is going to drop all the way down to here. Having said that, could we be down $200 on gold 2 days from now? Absolutely, but on an intraday basis, which is what this is intended to be, that's probably not realistic, because what's going to happen is price is going to hopefully, shoot down a bit more. But once it gets to this region right here, which is pretty much around the 3,400 region, it's probably going to be tough sailing after that. So what I'm going to do is I'm going to adjust my my take profit here. Again, this was the original trade plan. But alas, I don't think that's really going to happen. So we can see that's that 2.5 to 1 there, which was the original plan. And so if I pull this up here and just to kind of adjust this, just to show you what on the simulator here, that would be, I think, pretty much, where I would expect price to kind of stall. In other words, right around this region here. Okay, and so that would take us down to about here. Okay, and so that is, you can see that's really just barely 1.25 to 1 there. Okay, which is really not an ideal trade plan. Basically, all my trades and what we do at Precision Trading Labs, everything we're doing is kind of predicated on having a setup that where we can reasonably expect to get 2.5 to 1. So, at any rate, I will. We'll see what happens with this, and I'll be back with you for the conclusion. All right, so here we are. We are approaching the region where I'm anticipating that I think this is where I'm going to take profit. Obviously not the 750 trade plan that I originally had here. We are up about a little less than 300. I believe it's realistic to assume, not assume, but I think we could probably make it down to here. So that's going to be, really sadly only about 1.25 or so, 1.2 to 1 here. So again, this was really not an ideal setup. Under other circumstances, I might not even have taken the trade, but I had figured since I already set this up and had started to do this video, I figured I would see it through. But to be clear, so that's where we're gonna take profit here. So again, that was the original plan, but that this is where we're gonna go from here. So at any rate, I'm gonna pause it, and then I'll be back with the conclusion. All right, so while we're waiting for price to push down here, I am going to adjust this trade now. So what I'm going to do is I'm going to pull my stop, I'm going to pull my take profit so that it's right here at the beginning of that zone here. Okay, and so we're going to pull that right to here. I'm going to modify the order there. Okay, so that's where we are here. And then what we're going to do is I'm also going to pull the stop down here. Not that I expect this to go up there at all, but nonetheless, I would never be willing to take a loss on this. So at this point, though, I'm going to pull my stop down to here. So at any rate, there you go. So now we're all prepared for this thing to wrap up one way or another. So if in fact this pulls down to here, and in fact we're just about there, like I said, I expect this is probably going to represent the end of the trade here. Okay, so right there, I think we're pretty close to getting out here. So right here, this will be just a bit less than 1.25 to 1. We had $300 worth of risk, and we'll have made okay. And there we go. So at any rate, that was $378. Not too bad. Having said that, not a perfect trade, but it is what it is. Anyway, this is Mitch Firestone. Thank you for the privilege of your time, and I will see you next time. Bye-bye. All right, as a coda on this trade here, we can see price did come down here. It kind of stuck there. It's now sort of drilling into that zone that I had some concern about. Obviously, I'm already out of this trade, and one of the things I could have perhaps done would have been to take off half of it, move my stop to break even, and then see what happened with the other half. But frankly, I also have an appointment that I need to go to in about a half an hour, so I didn't want to really bother with all of that. But nonetheless, we can see price did come down here, and you can see it is kind of struggling to kind of get through here. Now, in fact, it may end up dropping below here, even before the end of the day here. So it's possible that there might have been some more profit to be had. And like I said, the way this could have actually been done would have been to, let's say, take off half the shares at the front door of the zone here, and then pull the stop to break even, or even let's say beyond that. In other words, perhaps make the trade, perhaps even pull it down to, let's say, maybe behind here, and give the trade a chance to actually, drill through here. And then at that point, then there would have been the potential for the last 3 contracts to perhaps go below there. I did not do that, but nonetheless, I just wanted to kind of, basically wrap it up by talking about that. So again, this is Mitch Firestone with Precision Trading Labs, and I will see you next time. Take care. Bye-bye.